I think that Bitcoin is gonna trade above $1,000,000 in early 2030s. 2032, 2033, I would be very surprised if we're not touching $1,000,000.
Bitcoin is exploding right now. As I'm recording this, it's sitting just under $70,000. Honestly, I didn't expect this move today. I thought we might dip lower before seeing any real strength. So what's going on? Is this the moment the market turns around? Is this the final opportunity to grab Bitcoin below 70,000? In this video, I'm going to break it all down for you. If you care about Bitcoin, pay close attention. This could be a major turning point for the entire market. Right now, Bitcoin is bouncing hard. It's not just a random bounce. It's rebounding from a key support zone. That means we may have just formed a higher low. And in market structure, that's a big deal. There are massive short positions stacked above us. If price keeps climbing, those shorts could get liquidated fast. When that happens, the move upward can accelerate quickly. Suddenly, what looked weak starts looking incredibly strong. So why is Bitcoin pumping today? Some people are pointing to the news about a new ETF filing connected to President Donald Trump, S-Truth social platform, and applications involving Bitcoin and Ethereum with the SEC. But in my opinion, that alone isn't enough to cause this kind of reaction. ETF filings aren't new anymore. The market has seen that story before. What actually feels different is this. There's breaking news that the White House administration is preparing to introduce a new bill in Congress focused on buying more.
In the House that builds upon that and allows some of the necessary authorities to centralize, properly safeguard these assets, and then explore budget-neutral ways to add to that stockpile. And then in the future, ultimately, if Congress decides to move in that direction, to allow for us to potentially add to that with outright purchase.
And here's why I believe this matters. Michael Saylor has been very close to the presidential circle. He has been openly pushing the idea that Bitcoin is not just an investment, but a strategic asset. He keeps saying that Bitcoin is a financial superpower tool. According to him, the United States should accumulate millions of coins, not just buy a little, but buy aggressively. He also argues that the government should pass crypto-friendly laws to dominate the global financial system. In his view, this is about leadership. It's about staying ahead of every other nation. He even compares it to historic strategic purchases. The United States once bought Alaska as a long-term national investment. At the time, many people laughed at that decision, but history proved it was one of the smartest moves ever made. So honestly, why wouldn't they make this move? Major financial institutions fully understand what is happening right now. Big players like VanEck see the bigger picture. They know this is no longer just retail investors buying Bitcoin. Governments themselves are stepping in. Right now, at least 13 different countries are actively mining Bitcoin. Let that sink in. This isn't just a market cycle anymore. This is a global competition. We are watching the beginning of a nation-state accumulation race. Countries are positioning themselves before supply becomes even tighter. And once governments start competing for a scarce asset, things can escalate very quickly.
California, bought the Louisiana territory. They were all very good investments. We think about Greenland right now. That's on the top of everybody's tongue. What's pretty clear is that you're going to want to be the leader in digital intelligence, that's AI, and you're going to be the leader in digital assets. If the nation doesn't buy most of the Bitcoin network, at the very least, what we want is constructive policy so that United States companies buy and United States investors buy digital assets. And that way the taxpayers and the nation benefits from their efforts.
Treasury Secretary Scott Bessent went on CNBC's Squawk Box today. He didn't avoid the topic. He spoke directly about crypto. He pushed for fast approval of a bipartisan Clarity Act. The goal is simple: create clear federal rules for digital assets and do it quickly. This comes at a time when the market is still dealing with heavy volatility. Prices are swinging, investors are nervous, and uncertainty is everywhere. According to him, the crypto industry needs structure. The overall crypto community wants guidance. They want rules that make sense, not confusion, not mixed signals. Clear regulation could remove a massive cloud hanging over this market.
Sovereignty over their own printing press. And we now count 13 different countries that are mining Bitcoin at the central.
So what are private companies saying about all of this? Before we go deeper, if you're finding this helpful, make sure you support the video and stay connected, because moments like this matter. Now let's talk about the big players in the private sector. The CEO of Coinbase, Brian Armstrong, who runs a company valued around $60 billion, recently shared his outlook, and his tone was extremely confident. He said the crypto market structure bill is likely to pass soon, and if that happens, he believes Bitcoin could move even higher. He didn't sound cautious. He didn't sound unsure. He said he feels more bullish than ever. That kind of confidence from someone at the top of a major exchange sends a strong signal. When leaders of billion-dollar companies speak like that, the market pays attention.
In a time when we are having one of these historically volatile sell-offs, I think some clarity on the clarity bill would give great comfort to the market, and we could move forward from there. So it's very important to get this done. President Trump has worked to make the U.S. the digital asset capital of the world. There's a lot of innovation that goes on adjacent to crypto in the blockchain, in DeFi. So I think it's important to get this clarity bill done as soon as possible and on the president's.
Now let's shift the focus to altcoins. In my personal view, many altcoins have already printed their lows over the past stretch. It feels like we are quietly sitting in an accumulation phase. This looks very similar to previous cycles. After long periods of pain and boredom, the upside usually follows. If history rhymes again, I expect strong upside for altcoins in 2026. Last year clearly felt like a bear market. Sentiment was crushed. Most people gave up. Right now, almost everyone sounds bearish on altcoins. So I have to ask you, is this the moment to slowly start accumulating? Well, one narrative that's heating up fast is privacy. Privacy could become one of the next major themes in crypto. We already saw Zcash make a powerful move to the upside, leading that conversation. Even Vitalik Buterin is exploring privacy solutions. Charles Hoskinson is also focused on improving this area. There's real development happening behind the scenes. While some projects focus on private transactions, others are thinking bigger. Concordium, for example, is aiming to bring privacy solutions to the wider internet. The idea is to unlock use cases that many other chains struggle to handle. Things like age-restricted content, gaming platforms, gambling applications, and verified digital access. They are building systems where users can privately prove eligibility and complete payments in a smooth way. Their token has recently expanded to multiple exchanges, increasing accessibility. What makes them interesting is that they are not just talking about theory. They already have a live product. They are forming partnerships and real integrations. That combination of compliance, privacy, and practical on-chain payments puts them in a unique position. And when narratives like compliance and privacy start trending, infrastructure plays often move first. If this current bottoming phase ends soon and the market shifts back into a risk-on environment, especially heading toward major political cycles, quality altcoins could perform very well. And we absolutely need to talk about Ethereum in that context. In a strong risk-on market, I tend to get even more optimistic about Ethereum than Bitcoin. Ethereum has a smaller market cap compared to Bitcoin. That alone gives it more room to run. On top of that, the fundamentals look stronger than many people realize. In many ways, Ethereum today feels similar to where Bitcoin stood back in 2018.
Remains the best performing asset class of the past decade. We've been through cycles like this many times at Coinbase, and adoption
that continue to develop and expand. The infrastructure is improving. Institutional interest is growing. Clarity around regulation is slowly forming. That's not bearish. That's constructive. I really liked how James Lavish explained this in a recent discussion. He's a macro investor and a former hedge fund manager. His entire career has been built on analyzing big financial trends. He approaches Bitcoin from a strategic, long-term perspective. When asked where he sees Bitcoin over the next 5 to 10 years, he didn't hesitate. He said he believes Bitcoin could trade above $1 million in the early 2030s. And he didn't say it for hype. He laid out a structured bull case, step by step, from monetary debasement to global demand for hard assets, from supply scarcity to increasing adoption. When you actually listen to the reasoning, it starts to feel less like fantasy and more like a long-term trajectory.
Right now, Danny, is an information or a knowledge arbitrage.
Yeah.
And so people just do not yet understand how Bitcoin is different and why it is the ultimate store of value and the ultimate debasement asset. They just don't understand it yet. There's a lot of confusion. There, the mainstream media puts out confusing and hit pieces about it all the time. They commingle it with all the other cryptocurrencies, and they just call them all the same thing. And so I have friends who say, "Oh yeah, I own Bitcoin. I own the Solana one." And it's like, yeah, they just don't get it. And it's okay. It's not their fault. There is an information arbitrage that you and I are experiencing right now. It feels bad, and it makes you feel like, am I an idiot? Am I just stupid that how early am I here? And the answer is you're still pretty early, because I think that Bitcoin is going to trade above $1 million in early 2030s. 2032, 2033, I would be very surprised if we're not touching $1 million Bitcoin. That's me. That's my thesis. That's where I believe this thing is going. But I also believe that part of that is that arbitrage, that knowledge arbitrage will close. And as that does, You're going to have the Harvards and the Yales and the University of Texas and the CalPERS and the Texas teachers and every pension and fire fund out there taking positions in Bitcoin as a core asset. And when they do that, that's when that knowledge begins to really spread, and people are like, oh, yeah, so Bitcoin is different. Okay, so Bitcoin is different. It's not just this moonshot thing. It's digital gold. Okay, then I should probably own some. And funny enough, is I think that that's going to be a much healthier rise for Bitcoin in price and a much more stable rise. It's not going to be this massive volatile thing. It's going to be like people are, oh, I get it. Okay, I get it. Oh, okay, I understand now. I understand how it's different. And then we'll feel vindicated, and we'll look like we're 143 years old when we're just in our 50s, or in your case,
inflationary forces or get actual deflation. Is that bad for Bitcoin in the short term?
No, I don't think so. Bitcoin is a hedge against inflation and deflation, because the chaotic part of this is, and it's ripping through the markets now. A lot of traditional industries and companies, being brought, the whole SaaS space, the disaster, as they're calling it. We think there is merit to that particular one, but I think you're going to see disruption all over the place, because the 5 innovation platforms that I mentioned are going to disrupt the existing world order. And what does that mean? If these technologies are so deflationary, it's going to be tough for the traditional world that's gotten used to sort of the 2 to 3% inflation to adjust. They'll have to embrace some of these technologies faster than expected. So the idea of counterparty risk, I think, is beginning to surface. We've seen it with First Brands. We've seen, private equity and private credit, especially, is where there have been a lot of excesses. SaaS, they are too exposed to that. Are we going to see counterparty risk manifest more broadly? If so, Bitcoin doesn't have that problem. And so it is a good hedge against deflation as well as